Short exercise 2-8, we're going to prepare a trial balance. Now, remember the main reason that we do a trial balance is to double check that our debits equal our credits. But also, a trial balance can be used to help us create our 3 financial statements. So, Oregon Construction, owned by Faye Robbins, reported the following summarized data at December 31st, 2025. Accounts appear in no particular order and all have normal balances. So in other words, what that means is that the balances are on the plus side. So what we're going to do is we're going to create a trial balance and we're going to list all the accounts that have balances. So remember, if an account ever has a 0 balance, you would not put it on the trial balance. But as you notice here, all of them do have a balance in this table. And now, to be honest with you, my accounting lab is not going to enforce that you put this in proper order, but let's try to do this in the proper order. And that proper order is we put assets first, so let's see how many assets we have. And so we have equipment here first, and then next going down our list, I see cash. And then lastly, it appears we have accounts receivable. So, all right, so within the asset section, you should put the assets that are most liquid at the top, and that is always cash. So cash will go first. And then we have to decide between equipment and accounts receivable, which one's first, and that should be accounts receivable because it is more liquid than equipment. Because remember, we're hoping to collect this accounts receivable here within the next 30 days. So you'll be turning that into cash by collecting on it. So that's why we'll put accounts receivable next and equipment after that. And then we're going to put the balances in the correct column. Now remember, with assets, they're always have the plus side on the left side. So all of these will have debit balances here on this left side. So we'll put in cash here for 8,000, and then accounts receivable for 4,000, and then equipment for 45,000. And again, these are all debit balances, and notice up here it says all these accounts have normal balances. All right, so now the proper order after assets are liabilities. So let's see how many liabilities they have. So we're looking for payables, anything with a payable here. So first, it looks like we have accounts payable for 2,000. I see a salaries payable for 12,000, and then going down our list, interest payable. So that is 3 liability accounts there. So liabilities, which is what these payables are, they are listed in order of how soon they will be paid. So accounts payable are always due within 30 days, so they will come first. They're always the first liability listed, and which side is the plus side for liabilities? It's the credit side. So that's here on the right. So we'll put that accounts payable balance of 2,000 there. So then let's see what we have next. So we have salaries payable and we've got interest payable. So how often do we have to pay salaries? Well, probably about every 2 weeks. So that would be next. So salaries payable is going to be next on our list of liabilities here coming down. So then we have 12,000 on the credit side, which is the normal plus side balance for the liabilities. And remember, you can technically put these in any order here. My accounting lab does not care as long as you get the debits and credits on this side correct. But we're trying to do this like we would do this on the job. Also on the job, you look at their previous trial balance or their chart of accounts to see the order of liquidity. So let's see, our last liability here is interest payable, so we will input that next. And that is here. And interest payable is for 6,000. again, normal balance on the plus side, the credit side for liabilities here as a payable. All right, so we have our assets and we have our liabilities. What's after that? We've got capital. We've got the owner's equity account, which is, again, capital. So Robin's capital here for $22,000. And then we would have owner's withdrawals next. So we have Robin's withdrawals here for 18. So we'll scroll down here. Robin's withdrawals for 1,800. So these are the two equity accounts. So now let's talk about capital. Which side is the plus side for capital? It is the credit side. So that therefore that 22,000 is going to belong here on the right under credit. And then which side is the plus side for these withdrawals? It's the debit side. So let's go ahead and put 1,800 here. All right, so now we have our assets, our liabilities, and our two equity accounts. Technically, capital is the equity account, but withdrawals is always listed next because it also affects equity. And then what else affects equity? We have revenues and then expenses. So what are our revenues in this data table? Let's see, we have service revenue here first. So we'll go ahead and input service revenue next. And then what is the plus side for revenue? It is the right side, the credit side. So that is going to be 34,000 credit for service revenue. And then we've got our expenses, and those will list in any order. So let's see what is first here. So we have rent expense that shows up first. And what is the plus side for expenses? It is the debit side. And that's why we'll be putting that on the left for 14,000. And then let's see how many other expenses we have. Looks like we have a salaries expense here and a utilities expense. So those will come next. So salaries expense, make sure not to put salaries payable on accident. 2,000 debit. Again, expenses are on the debit side, and then utilities expense last. And that is going to be for 1,200. All right, so let's go ahead and minimize this and squeeze this up so we can see all our accounts. So the last thing we're going to do is add up the debit side here for a total and the credit side for a total. And these should equal the same number here. So when we add the debit side together, it is going to be a total of 76,000. And then when we add our credit side, also a total of 76,000. So our debits do equal our credits, and our trial balance balances. And now if their next step was to create income or financial statements, you create the income statement first. And if you're curious if the company made a profit, you take the revenue here of 34,000 minus these three expenses. So it looks like they've got some profit here between the two. So let's go ahead and check our answer. Nice work.